Have you ever wondered if your commission-free investment platform actually has hidden costs lurking in the shadows? We all love the idea of investing without paying a dime in trading fees, and M1 Finance has certainly built its brand around that promise. But as savvy investors, it's crucial to look beyond the surface. Today, we're diving deep into the world of M1 Finance fees, not just the obvious ones, but also those less talked about regulatory and account fees that can quietly eat into your returns. When you choose an investment platform, the headline often screams zero commissions. And that's fantastic. It means you can buy and sell stocks and ETFs without paying a per-trade fee, which historically was a significant barrier for many investors, especially those looking to dollar-cost average or diversify frequently. M1 Finance delivers on this. You can build your custom pies with various investments, and when you contribute money, M1 automatically buys fractional shares to maintain your desired allocations, all without charging a commission on those trades. This automation and commission-free structure are key selling points for M1, making it incredibly attractive for long-term, passive investors. However, the reality of the financial world is that no service is truly free. Brokerages have operating costs, regulatory obligations, and a business to run. So, while M1 Finance is indeed commission-free for stock and ETF trades, it's important to understand the other types of fees that might apply. These can broadly be categorized into two main groups: regulatory fees and account service fees. Understanding both is critical to getting a complete picture of your investment costs. Let's start with regulatory fees. These aren't unique to M1 Finance. In fact, they're typically charged by all brokerages and are mandated by regulatory bodies like the Securities and Exchange Commission, SEC, and the Financial Industry Regulatory Authority, FINRA. These fees are usually tiny, often just a few pennies, and are passed on to you, the investor, when certain transactions occur. They're not designed to generate profit for the brokerage, but rather to fund the regulatory oversight of the securities industry. Think of them as the small administrative costs of keeping the market fair and orderly. The two primary regulatory fees you'll encounter on M1 Finance, and pretty much everywhere else, are the SEC fee and the FINRA Trading Activity Fee, TAF. The SEC fee, also known as the Section 31 fee, is a charge imposed by the U.S. Securities and Exchange Commission on the sale of securities. It's a very small fee, calculated as a percentage of the total dollar amount of the securities sold. For example, the current rate for the SEC fee is incredibly low, often expressed as a fixed dollar amount per $1 million of transactions. So, if you sell $1,000 worth of stock, you might pay something like $0.008 or less than a cent. It's truly negligible for most individual investors, but it's there, and it's a direct cost of selling your investments. The SEC uses these fees to fund its operations, ensuring investor protection and maintaining the integrity of the securities markets. Then there's the FINRA Trading Activity Fee, or TAF. This fee is charged by FINRA, a self-regulatory organization that oversees brokerage firms and exchange markets. The TAF applies to the sale of covered equity securities, which include stocks and exchange-traded funds, ETFs. Unlike the SEC fee, the TAF is calculated on a per-share basis, with a maximum cap per trade. For instance, it might be $0.000166 per share, with a maximum of $8.30 per trade. Again, for small trades, you're looking at fractions of a cent. Even for larger trades, the maximum cap means you won't be hit with an astronomically high fee. These fees help FINRA fund its regulatory activities, including investor education, enforcement actions against bad actors, and market surveillance. It's crucial to understand that these regulatory fees are only incurred when you sell a security. When you buy, you typically don't pay these specific charges. This distinction is important for investors who primarily focus on accumulating assets. If you're a long-term investor who buys and holds, you'll encounter these fees only when you eventually decide to sell off some of your holdings, perhaps for rebalancing, generating income, or exiting the market. They are automatically deducted from the proceeds of your sale, so you don't need to worry about manually calculating or paying them. M1 Finance, like all other brokerages, simply passes these mandated costs along. Beyond regulatory fees, M1 Finance, like most financial platforms, has a range of account service fees. These are the fees that directly relate to the services M1 provides, ranging from platform access to specific administrative tasks. This is where you need to pay closer attention, as some of these fees can be more substantial than the pennies associated with regulatory charges. The most significant account fee for many M1 Finance users is the platform fee. As of current policies, M1 charges a monthly platform fee of $3 for clients who do not meet certain criteria. This fee applies if your total M1 assets do not reach a minimum value of $10,000 at least one day during each billing cycle, or if you don't have an active M1 personal loan. This $3 monthly fee, while seemingly small, can add up to $36 a year. For accounts with smaller balances, this percentage-wise can become a noticeable drag on returns. For example, if you have a $1,000 account and pay $36 in platform fees, that's a 3.6% annual fee on your principal, which is quite high and can significantly erode your investment growth over time. However, if you maintain $10,000 or more in total assets across your M1 Invest and M1 Earn accounts, or have an active M1 personal loan, this monthly platform fee is waived. This incentivizes users to consolidate their assets with M1 or utilize their lending products. Another related fee is the IRA fee. Beginning in September 2024, M1 announced a monthly $3 IRA fee for clients with an IRA who are not exempt or already charged the platform fee. Similar to the general platform fee, this IRA fee is waived if you have more than $10,000 in assets on M1, have an active personal loan, or are already paying the $3 platform fee. This means that if you have multiple retirement accounts, you'll only be charged a single $3 IRA fee per month, regardless of the type or number of retirement accounts you hold with M1, provided you don't meet the waiver criteria. This is an important consideration for those utilizing M1 for their traditional, Roth, or SEP IRAs. Then there are miscellaneous fees, which are typically charged for specific, less common services or actions you might request. These can include things like outgoing account transfer fee. If you decide to transfer your entire account out of M1 Finance to another brokerage, there's usually a fee associated with this, often around $100. This covers the administrative costs of facilitating the transfer of your assets to a different institution. If you're transferring an IRA, there might even be an additional IRA termination fee on top of the outgoing transfer fee, potentially bringing the total to $200. This is something to keep in mind if you ever decide to switch platforms. Wire transfer fees. If you need to send or receive money via a domestic wire transfer, M1 Finance typically charges a fee, for instance, $25 for domestic wires. With that said, thanks for watching and until next time.